Hey Bowtie Nation, Joseph Hogue here with what will be the next evolution in artificial intelligence, worth trillions for the companies doing it, and triple-digit returns for investors. We are already seeing agentic AI develop, AI that thinks, and we've had basic robots doing industrial work for years. When we put these two together, it will change the world. You need to be ready for this, and in fact, we've already started talking about some of these companies on the channel, with one of these stocks up 118% this year. And my position in it up $133,000, my fourth largest holding. Like any disruptive technology, hype is flooding the market, so I'm going to show you the deep research you need to separate out the good from the great, and the ones that can double your money in less than a year. And here, I've found one AI robotic stocks that can do it in the next 21 days. I'll show you 5 stocks ready to dominate that next wave of AI, 5 stocks already up an average 117% over the last year, and then reveal the one stock that could boom within 3 weeks. Starting with Rich Tech Robotics, ticker RR, at just $219 million market cap. These first two names are penny stocks, so lots of risk, but also upside potential. Rich Tech has a limited product lineup and only $4 million in sales, but is positioning in the consumer service market, a segment that could see 25% annual growth and beyond as the company broadens into hospitality, restaurants, and retail, potentially making revenue booming higher. And it doesn't have to go far to make a big move here. Even on forecast for $5.6 million in sales this year, that is a 40% growth, followed by forecasts of 113% growth next year. I'll show you how to find this and why it's so important later, but cash flow is really the problem here. With a growing cash outflow in operations and only $11 million in cash on hand, now the company doesn't seem to have a problem raising debt financing, but it's touch and go here. And that's the risk in a lot of these small cap penny stocks, that cash flow survivability while they grow into that market opportunity. It could be a multi-billion-dollar company and a 10x return on that $42 billion consumer robotics market, but it's going to have to survive first, and investors should be ready for a bumpy ride. And here, folks, that segment level is how you need to think about robotics and the deep research I did to find these stocks, because not all of the names in this theme are going to produce those triple-digit returns. I pulled estimates for the 6 types of robots, the current 2025 market size, and then forecasts for 2030 to find growth rates for each. And there are 2 things I want you to notice in this chart. First is that absolute size of each segment. For example, you see here that industrial robotics is already an $87 billion opportunity, while other segments like the billion-dollar delivery segment is much smaller. Now, finding a company that dominates in that industrial segment of robotics then could mean a stock that is already paying off, and in fact, that's where we find that stock up 118% so far this year and up $133,000 in my portfolio. But just as important, that second point here is the growth rate, because for these stocks, it's all about how fast revenue is growing and how high that can take the stock price. So here, you don't just want a company in that large market, but also one that can book that 29 and 32% growth for years like we see in some of these other segments. We've still got 4 more robotic stocks to highlight, including the one stock I'm buying above all the rest, but I wanted to add an honorable mention here for the Global X Robotics and Artificial Intelligence ETF, ticker BOTZ. Now, as a fund of 50 stocks, this isn't going to give you that 118% return like my favorite in the space, but there are 2 reasons every investor should have a portion of their portfolio in these broader ETFs. First, because as much time as I spend researching individual stocks, I know I'm not always going to find the very best, and while we've had some huge winners here on the channel, like SoFi up 174% and CrowdStrike up 109%, stocks can also swing the other way. Owning shares of that BOTS ETF with all 50 of the companies in this theme means I know I'm always going to get the upside exposure to robotics and AI without having to be right all the time. And you out there in the nation know my favorite use for ETFs like this is also mining for the stocks to start my research. I can go to the holdings here in the menu and see all 50 stocks held in the fund, every big player in AI and robotics. It is a ready-made list of high-growth stocks and a hell of a lot easier than trying to pick from 5,000 stocks in the market. But then looking at the list, you also see that second reason to have some of your money in a fund like this, because it gives you access to a lot of the foreign stocks that you couldn't get otherwise. Scrolling through, you're going to find big players in robotics like Fanuc and Keyence out of Japan, Rainbow Robotics out of Korea, all strong robotics leaders, but with no shares on the US exchanges. So putting in some of your money here not only spreads your risk across companies and industries, but also countries as well. I still like the upside return in these individual stocks, so I would put more in a few of those, but investing 3 or 5% of your portfolio in a broader fund like this is going to go a long way for your money. Back to our list, and shares of Paladine AI, ticker PDYN, up 295% over the last year. This one just barely missed out on our cheapest AI stocks list, but could be worth another look. Paladine is the software side of robotics, advancing AI systems to enable robots and drones to think and adapt more like humans. Its flagship platform, Paladine IQ, is a real-time, closed-loop autonomy software stack that gives robots the ability to observe, learn, and reason, all on the edge without the need for cloud connectivity. And Paladine's competitive advantage here is in its hardware-agnostic and edge-based capabilities. If it can pull these off, its software is going to revolutionize any robot and wouldn't be constrained by connectivity limitations. But like we saw with Rich Tech, that is a big if, and sales are down this year, though expected to double to $12 million next year. It's also burning through cash with an operational outflow of $22 million last year and just $10 million in reserves. The company recently announced additional funding under its contract with the Air Force, which is going to buy it more time, so could bridge that gap to next year's sales spike. We've still got 3 more robotic stocks to highlight, but just as important as those stocks to buy is how you find these, how to separate out the hundreds of companies in the theme to find the 5 with the highest growth. And so just like we did with our cybersecurity update last week, this all starts with that deep segment research, finding the areas of robotics with the fastest growth, and then the companies with a competitive advantage in each. Nation, this is key and hugely important. Yes, the entire robotics market is booming, but where would you rather be, in a company growing at just 11% rate of the industrial robot segment, or one poised to benefit from 29 and 32% growth that we see in this delivery or the intelligent cobot segments? Now from there, though, you also need to ask yourself which companies have the software and the architecture that could cross these segments. That industrial segment might only be growing at that 11% pace, but if you can retrofit those robots for delivery or security, you can take growth to a whole nother level. But then since a lot of these companies are super small, startup-type companies under $1 billion market cap, you need to be paying attention to the health of cash flow. It does no good to find a company with $1 trillion idea if it goes bust before it reaches that cash flow stability. So here we can go to the cash flow statement in the financials, and in a rainbows and unicorns world, I'd like to see the operating cash flow positive or at least becoming less negative each year. With explosive growth and the expenses that come with it, that's not always possible. So I also want to see the company as having no problems raising debt financing and that it has enough ending cash to cover at least a year of that free cash flow burn. Now, we see none of this in that case of Rich Tech Robotics, which is why it's kind of that Hail Mary investment and very long odds. Now, folks, I know this kind of deep research takes a hell of a lot longer than just clicking over to YouTube and buying what some Yahoo in a bow tie says, but this is the kind of process you need to be using. Take control of your money, put in the time, and you will be a better investor. Next here, Teradyne Inc., ticker TER, is the only non-pure play robotics company on the list, but I wanted to include it here as a sleeper stock on recent news. That's because Amazon announced a breakthrough to its Vulcan robot in May, a tactile ability that would be a game changer in robotics. You see, up till now, the biggest hurdle for robotics has been the nuance that humans have in gripping something, between too little and that crushing force of too much, something robots just can't get right. So a robot with a sense of touch would revolutionize the market, and one hedge fund is reporting that Universal Robots, which Teradyne acquired in 2015, is making that possible. Now understand, unlike these other companies, robotics isn't the main game here. Robotics at $69 million in revenue is only about 10% of Teradyne's total, with $543 million from its semiconductor system-on-a-chip testing. And analysts don't expect much growth here, with sales forecast up just 2.8% this year, but jumping 19% next year, and solid earnings growth. But that also makes it cheaper than most of the stocks on this list at just 5.3 times on a price-to-sales valuation. So if it can pull off some kind of robotic surprise, it could send the shares much higher. I'm going to reveal those 2 best robotic stocks next, but if you've ever wondered what's in my portfolio or just want to see the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. This is the app we've been waiting for, made for investors by investors. I just started using it a couple of years ago and love the app for getting ideas and sharing my own portfolio. This is much more than a social app, though. You can connect your brokerage accounts or just input your portfolio to track all your stocks in one place. You're going to see insights like portfolio percentages and average dividend yield across the entire group. You'll also be able to join more than 300,000 investors in the social feed to see what everyone else is talking about. I've shared my portfolio on the app, and it's totally free to download, so look for that invite link I'll leave in the description and check that out. Now, for the robotic stock with the most upside, I've got to go here with Symbotic Inc., ticker SYM, already up 118% this year and up 98% of my portfolio since I started recommending it, my 4th largest holding. Now, I know I've covered Symbotic a lot lately on its radical change to the $1.2 trillion warehouse market. Walmart owns 11% of Symbotic and uses it in all of its 42 regional distribution centers. The robots are also used at Target and Grocer Albertsons warehouses, and SoftBank invested $625 million in a joint venture to roll out Symbotic everywhere, transforming global logistics. This company already has a $23 billion backlog of orders, which means this 20% forecasted sales growth to $2.2 billion this year just keeps on going for years to come. And why I think Symbotic can still surprise to the upside long term is its scalability and that reach into other segments. Its autonomous mobile robots and vision systems could be expanded into retail automation, consumer applications, as well as delivery, all high-growth verticals. And unlike those first two stocks with the shakier financials, Symbotic is very strongly cash flow positive and actually paid down debt over the last year while still investing heavily in R&D. I'm highlighting another stock on the list because I think it has more surprise potential here in the next few weeks, but I am definitely holding on to my shares of Symbotic and buying more on any dip opportunities. We've still got one of my favorite robotic stocks next, one I think can dominate multiple segments for that super normal growth, but there is one growth theme that's even more potential than those robotics, and it's unstoppable. Check out the video in the corner here next for a deep dive into the cybersecurity stocks that I'm buying, including one that's already doubled my money. And here, shares of Serve Robotics, ticker SERV, are already up 382% in the last year, but could have some very good news for investors when it reports earnings August 12th. The stock got slammed in February when NVIDIA reported on its 13F filing that it had sold all 3.7 million shares it owned. But the fundamentals and a strong IP portfolio for this company have brought it back. Serve Robotics spun out of Uber in 2021 and is the leader in that sidewalk delivery robots, a market it says could be worth $450 billion by 2030. And while that differs from other research showing just $3.2 billion market opportunity, either would mean explosive growth off the company's $1.8 million in sales last year and the fastest growing among robotic segments. Uber is still a major customer with multi-year contracts for 2,000 delivery robots to be operating by the end of this year. It's already completed tens of thousands of deliveries for Uber Eats, 7-Eleven, and other customers. And one overlooked upside here could be in its lead in autonomous software, one of the few to reach level 4 autonomy. And this is because that intellectual property and the potential to reach that level 5 autonomy isn't just valuable to the company and its business, but in other applications that could become a revenue source for Serve. Forecasts are already for 275% sales growth this year and nearly 650% next year to $50 million. And that would go a long way to justifying the ridiculous valuation here of 364 times price to sales, making it a steal for just 12 times valuation on next year's sales forecast. Now, this one is riskier than Symbotic, which is why I'm still loading up on that stock as well. But with Serve, you've got a pure play in the fastest growing segment and transferable advantages that could make it a winner in other segments as well. Join me on the Blossom Investing app and see what over 300,000 investors are talking about. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.